SoFi is gaining market share in making loans as other lenders are pulling back. So, why are other lenders pulling back and giving SoFi this market opportunity? Well, since the Federal Reserve began raising interest rates a little over a year ago, the risks of a recession are rising. That's typically what happens when the Federal Reserve raises interest rates. Because interest rates start to move higher, people become less interested in buying a home because now your total payment is going to be lower. I'm sorry, it's going to be higher. Well, if you're not buying a home, you're probably not going to Home Depot to purchase home improvement goods. You're probably not going to pay that moving company to help you move. You're probably not going to buy new furniture, etc., etc. So, all of that decrease in activity causes macroeconomic activity to slow down, which potentially causes a recession or at least an economic slowdown. When there's an economic slowdown, people lose their jobs, people don't get raises, and the risks of missing your loan payment increases. So that's why other lenders are pulling back on lending significantly because they fear that there's a recession coming. They fear people are going to lose their jobs, and they fear that people are not going to pay back the money that they're lending out. So they're becoming more cautious and really tightening lending standards, not giving out as many loans, raising interest rates on the loans they do offer, which makes it more available for SoFi to take market share. So, CEO of SoFi said in a May 24 call with analysts, said we have gained market share, but I would attribute it more towards our ability to have faster time to fund, have attractive pricing, and really efficient marketing. So those are the sources of SoFi gaining market share in the industry. They're faster to fund the loans, which of course if you're looking for a loan, there's a reason why you want that money and you've got something you want to spend it on, so you need that money. If one bank offers you that money faster than another one, you're going to choose to go with the one that gives you the money faster. Another important factor in making decisions on which bank to go to for a loan is the interest rate. If one bank offers you a lower interest rate, you're more likely to choose that bank instead of the other one. And so SoFi is really winning on those two parts. They're faster to fund, right? The CEO saying that they've gotten their time to fund down to 2 days. When he arrived at SoFi, I think this Anthony Noto arrived as the CEO around 2018. When he arrived as CEO, it was about 7 days. So he's gotten it down from 7 days to 2 days time to funding. That's a really huge improvement, and of course that makes it more attractive to people to look when they're looking to borrow money. So they continue to offer great pricing and great selection. But he makes this important critical point at the end, which I don't want you to miss. He says the quality of the borrower has stayed really, really high. We're at a FICO score about 750 and a personal income of about $160,000. That's critical. That's critical, right? Because if you're looking to lend money in a environment where the risk of a recession is higher, you certainly want to look for higher credit score borrowers because these borrowers are less likely to default even in the event of a recession, even in the event of an economic slowdown. Even if these individuals lose their job, they're probably more financially stable and they can probably afford to continue making their loan payments even if they lose their job. That's probably why they have a credit score over 750, right? Because they're financially responsible. They have a robust savings. They manage their budget. They don't overspend. They have an emergency savings fund. And so, for all those reasons, these borrowers are less likely to default, which is great news for SoFi. Not only are they gaining market share overall, but they're doing so by going after the highest quality borrowers. So they're not gaining market share by going after lower quality borrowers just so they can do more business and they can gain more market share. So that's been really good news, and that is really good news for SoFi stock investors. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.